Hello, traders. Welcome to the XTB webinar, How to Create and Trade Your Stock Portfolio, and live Q&A with me, Chris Capre. We're starting a few minutes early, so we'll just kind of let everybody get settled and join. Hopefully y'all can see the screen and hear me okay. If you can, let me know in the chat. I know there's a little bit of a delay between what I'm saying in YouTube Live, so we'll understand with that, but I'll also get webcam going here. And webcam should be live. There we go. Okay, webcam is good. Hello, hello. How's everybody doing today? Go ahead and type in the chat if you can, in the YouTube chat, if you can hear me. For those of you here. Oh, it says 11. It says 11 waiting, by the way. Okay, 10 watching now. Okay, it switched over. Took a second delay. Copy that. Okay. Magdama, hello. You're all good. Awesome. Pleasure to be here. Cool, cool. We're going to wait just about 2 more minutes. Start time is in 2 minutes. We'll wait for everybody to kind of slowly join. We got a fair amount of questions today that were asked in ahead of time. So we're going to do those questions and then we'll do an open Q&A after that. Look at some charts. Okay. Alanda Sulkas. Hi, Chris. All good. Appreciate it. Thank you. Alanda Sulkas. That's a cool name. Where is that from, if you don't mind me asking? I don't know if I've seen a name like that before, and I've seen a lot of names. Hope you don't mind me asking. I've traveled a lot. I've been about 40 different countries, and I'm always fascinated by different cultures and different languages and different names. So yeah, let me know. I don't even have a guess on this one here. Alanda Sulkas. That is a tough one. Okay, more people rolling in. Very good. We'll start in about 1 minute. How's everybody's trading going for this week so far? Let's see, that sounds good. We got end of the month today, so we're going to have some end of the month rebalancing flows. And then we'll also have, because of Good Friday holiday on Friday, we're going to have option expiry a little bit early. So it's 1 expiry tomorrow and then 1 on Friday. So it should be interesting. Okay, we'll start in 1 minute, less than 1 minute. Okay, I think we can go live now. All right, fantastic. Let me also post this in my Discord with my members. Get a few more rolling in here. And open Q&A with XTB now. Come join. Okay. All right. Send out to my members in Discord. All right, good. Let's go ahead and begin. So welcome everyone here. It's good to see everybody here and XTB members. And also want to thank XTB for this. My name is Chris Capre. I am a verified profitable trader, former broker on Wall Street, traded for a hedge fund, been trading for 2 decades now. So I've seen it all. And I don't just trade, but I also train people how to do it. And I don't know why, for whatever reason, it's not something like I studied to be like this in college or, you know, afterwards. It's just seemed I had an ability to help teach traders how to learn how to improve their skills and become profitable. And so it's just something that I've had. Hello, Jeremy. Good to see you. So that is one of my skill sets. And in today's webinar, we're going to be talking about how to create and trade a stock portfolio. But we have a lot of questions that were kind of posted ahead of time. And what I'd like to do is actually kind of get into some questions. There's some really, really good questions that people asked. And so I kind of want to answer these questions. And then what we're going to do is we're going to do an open Q&A where you can pretty much ask any question you want. And then we'll, through that process, we are going to talk about how you can trade and create a stock portfolio. So we're going to get into it through the questions. and then we'll answer it a little bit further as we move on through these questions. So I'm going to start with the first question here, which is from, let me move this over here actually, be closer to the camera. Okay. So the first question is, I have been experimenting with the demo account and I've always had success with the demo account, but as soon as I try the real account, I get a lot of ups and downs, mainly down losses. What am I doing wrong? I think I need to reevaluate the way I trade and start over. What steps do I need to take to become a good trader? Thank you. So this is a great question. It's a very common experience for traders to do well on demo, but then they switch to live and they find out that they're struggling. And from my experience, so I've been teaching traders to become profitable with Second Sky since 2007. It's 14 years now. I was also teaching at the brokerage, and when I was at the hedge fund, not only did I trade for them, but I also taught the students as well. So from my roughly 17 years experience training students, generally the number one reason why students can do well on demo, but then have a hard time once they switch to live is usually a mindset or psychological issue. When you're trading demo, there's really no fear of losing money because it's fake money. And our conscious mind knows that. Whereas when you're trading live, the emotions, the fears, the reality of potentially losing money is much more real than it is when we are trading demo. There are certain things that you will do on demo that you may not do live. And some of those are good things that you won't do on demo that you would do live. And some of those are not good things. And so one of the good things is that you tend to just not experience as many emotions because you know when you hit the buy and sell button on a demo account, it's play money. It's not pulling out of your wallet. It's not stopping your ability to pay your mortgage or pay your bills or put food on the table. You lose in demo trade, doesn't matter. So because of that, we tend to trade with less emotion and less fear. The moment we start trading with live money, our emotions and our mindset really now start to become much more prevalent in our experience because we know if we don't make the right trade or a good trade or execute properly or use proper risk management or whatever, that is money coming out of our bank account. And that has a very different real threat and experience to us. So this experience is common if you show consistency of execution, of executing your strategy, of managing risk, of not experiencing your emotions or being able to digest your emotions while in demo. Then the moment you flip that to a live account, that all goes out the window. Then that means two things. One, you need to train your mindset. And two, that the skills that you think are wired in your brain are not fully wired into your brain. You know, it's very easy in a video game to play a driving simulator and think you're a good driver. It's very different when you're moving, 200 kilometers around the track, 200 kilometers per hour on the track, and there's other cars there. That's kind of the same experience with trading. So the key question then is to ask yourself this. Did you have a strategy with relatively clear rules in place to get in and get out of the market when you're trading demo? If so, were you executing that perfectly in demo or consistently in demo? If the answer is yes, and then when it went to live, you weren't doing that, then you know it's 100% trading psychology. It's mindset, it's emotions, it's fears, it's worries, it's doubts. And if you weren't necessarily executing things consistently on demo, but you just happen to be winning, and then when you go live, you're even more inconsistent, then it's not just trading psychology, but you also haven't fully wired these skills into your brain. So yes, that experience you have is very common, whoever asked this question, and that's totally understandable. And with time, with practice, with a focus on the process and the skills, you will continue to get better, and eventually that experience will wane. So have patience. That experience, it's kind of like if you play sports, the first time you're playing in front of a big crowd, it feels kind of nerve-wracking, but as you do it more and more, you eventually build the capacity to deal with that. So that would be my suggestion on that. It's a great question. Question number 2, what platform is a good platform to trade on? So in terms of a multi-asset class platform to trade forex, to trade CFDs, to trade crypto and things like that, Obviously, it depends upon where you are in the world. There's only certain brokers that are available in certain countries. But the XStation 5 is one of my top, it's one of my favorite platforms out there right now. And that's because it's got a great user interface. It's very easy to use. It has a good amount of information in terms of news, in terms of heat maps, in terms of filters, for like CFD stocks and things like that. The analytics reporting on your performance of your trades over time is much better than most brokers. It's just a very simple, easy to use platform. Within minutes of me opening it up, I felt very, very comfortable with this. And that's a really good sign of good design within a platform. So my recommendation, if you can work with XTB and those are the instruments that you want to trade, the instruments they have available, those ones you want to trade, I'd recommend the XStation 5 platform. If you're trading different instruments, let me know in the chat and I will, potentially suggest some alternatives. Next question. I want to start trading stocks. Could I do this with just 250 pounds? Yes, you're not going to be really building a portfolio with 250 pounds. You could, but with margin and the stocks you're going to be trading, you're not going to be able to open a broad base of positions to do that. But you can trade individual stocks, build up the size of the account, and then start being in a position to where, you can start to have multiple positions running more like a portfolio. So, I think your first goal would be to be able to turn that account from 250 pounds to about 2,000 pounds. I think that'd be a good first goal in terms of, hey, this is what I want to achieve in terms of growing my account. And that will allow you to increase your share size and have, multiple positions open at the same time. With 250 pounds, you're going to probably want to concentrate on stocks that are under 20, pounds or euros or dollars a share, because that will allow you to have more shares in terms of buying power. And if that stock increases and you catch a good increase on that trade, you'll be able to increase it faster than if you did like one share on this stock and one share in this stock and one share in this stock. So yeah, you can do it. It's not like the largest amount to do a massive amount of stock trading, but it's a start. And it's a great way to kind of test your experience and slowly build up the account and give you goals. Again, first goal, 2K. I would say after that, maybe 10K. And then eventually you'd want to get that to around $25,000 because that opens up a lot of opportunities. You can have lots of trades open at the same time, run a really nice size portfolio, and, be doing it in such a way that maybe some of your positions are losing, but then some are winning, and you just have this constant stream of generating cash flow. The other thing with 250 pounds is you're going to want to turn that over fast, because if you make one trade, for like a month and it doesn't win, you're not turning the account over fast and you're getting a slow feedback loop. So my recommendation, if your goal is to turn the account over and increase its size relatively quickly, would be to lean more towards short-term trading. You can be in and out quick. If you win, you can turn the profits over quickly, and it will just allow you to potentially increase the size of that. So yeah, that would be my recommendation. It's a good question. Okay. Next question is, what is your view on holding stocks and adding at dips through volatility versus reallocating to bonds and safe haven assets? Yeah, so I prefer to if I had to choose between that, I would rather reallocate. I wouldn't like to necessarily buy on dips just because there's an increase in volatility. There has to be a reason for you to want to buy on dip. It has to be a good price location. Maybe there's a lot of option positioning. A lot of dealers are positioned at a certain level. There has to be a reason to buy on dips, especially if you already hold the stock. Because if you hold it at a certain price, say $30, and it dips to 25, yeah, it's cheaper, but there has to be a good reason for you to want to get in. If there's no good reason, you wouldn't just want to have a strategy of buy on dips when you get the chance, because sentiment, flows, fundamentals, and technicals can and will change for every stock. And so you have to reevaluate that as the dip happens. Hey, are the conditions still supportive? Fundamentally, technically, are the flows still solid? Is the sentiment still good? If so, then there may be a legitimate reason to buy in dips. But if not, then you have to look at, hey, what is showing strength? I tend to, if I have in my portfolio, I'm generally running on a low end 20 trades at a time. And, there were certain points last year or this year where I was running 30 trades at the same time. And that's a day and swing trades and portfolio trades and option. I mean, everything. So right now we're only holding like 18 positions, like the smallest amount all year. Some of those portfolio positions are down, some are up. But if I'm going to reinvest in that stock, all those things still have to be in place. If they're not, then I will look for what is strong. And as long as it's strong and within my conditions, then I'd suggest shifting to that. I wouldn't suggest necessarily bonds or safe haven assets because, safe haven is to protect money, but there are multiple ways you can protect money. One of the best ways to protect money is to make money. And so if you shift your assets into strength, that's a great way to protect your money. So yeah, it's a great question. Okay. B-Ray has a question. Hi there. Do you have any entry-level book recommendations? Yeah, there's a book I have. Let me pull my Kindle real quick. Are you talking about, B-Ray, are you asking about like intro to stock market? What are you looking for? An intro or an entry-level book recommendation? Because I have videos that are entry-level video recommendations, but it helped me to understand specifically like what market are you looking to trade? Or do you want entry-level on price action? Do you want entry-level on technical analysis? Do you want entry-level on the stock market? What would you, just to be certain, let me know what you are looking for an entry-level material on. Okay, I do have, if you are looking for one in the stock market, there is Stock Market 101 by Michelle Kagan. So I'll type that here. I think this is a really good book to kind of get your feet wet in understanding how the stock market works. We have recently published what we call the best stock trading course for beginners that really lays a good foundation also, and probably goes a little bit further than that book on how to understand and trade stocks. So I think both of those would be fine. If there's another market or something like that, stock market CFDs, yeah. Okay. So we don't have one specifically on CFDs. I don't necessarily have a book that I recommend specifically on CFDs, but I think if you can understand what's in that book and understand in that video, you will still have the same tools to relatively understand how to trade CFDs because most of the tools will be the same. The only difference is you have to understand the differences between CFDs and trading the actual stocks. Other than that, the overall methods and approach would be relatively the same. So it's a good question. Okay. Next question is there a thing like a stable stock to mitigate market crashes, or is it just better to have a diversified portfolio? Yeah, generally having a diversified portfolio is far better. There rarely is any single stock that can weather everything. There are certain stocks that are always going to be susceptible to market risks. When COVID hit, every stock virtually was going down for, the first, month from end of February to like middle of March when the market bottomed, everything was going down. So it's important to understand that there is no stock that's going to protect you from all kinds of risk. And that's where diversification really comes in your portfolio, because while some will go down, some will actually really benefit from the conditions that a market crash is presenting. And so diversification, not just across stocks, but across markets is really helpful. Have some exposure to commodities, having some exposure to crypto, having some exposure to, currencies, having exposure to stocks. A really well-balanced portfolio tends to, over periods of time, manage risk pretty well while being able to capture some of the upside. So yeah, it's a very, very good question. Very good question. Okay. Next question. How can I reduce loss as a beginner? So reducing losses, if you think about it, really comes down to better trade selection. You can't eliminate losses. Losses are a part of trading, but you can reduce losses in the sense that you can try and find better trades to select, basically. And so that is a skill that you need to learn over time. There is no like one answer for that, but your goal shouldn't be so much in the beginning. I'm assuming based on this question that you're still, you said as a beginner, your goal should be more so to focus on your skills. So if you think of trading, you got to think of it kind of like an athlete does a sport. You don't think about in the sport like, okay, it's not like you're a beginner in the sport and you go to practice just to learn how to win. No, you go to practice whatever sport is, let's say football, or what in the US they call soccer. So when you first go, if you're a beginner in football, you don't go to football like day one, like, okay, here's how we win. It's no, here's how we build these skills. In football, you'd build the skills of passing and dribbling and trapping. Those are all kind of core skills. Understanding defenses, understanding angles, more and more subtle skills. As you build those skills and your skill level goes up, you will have much more tools to then win a game. And so instead of focusing on, hey, how do I lose less and win more? You don't do that by directly focusing on that. You do that by improving your skills, because your skills is what allows you to make better trade selections, to reduce risk on your losses, to improve your alpha or your profits on your wins. That is, if you want to reduce losses, then you need to build a skill of trade selection. And to do that, you have to build a group of skills. So it's a very, very good question. Real briefly, I guess I can add on to that. There are 4 core trading skills you will need to make money trading. So very much like in those video games, when you have a character and they have different skill trees that you can try out, trading is very much the same. The 4 skills or skill trees that you have to develop as a trader is 1, your buying and selling decisions. What do you use to buy and sell whatever instruments you're trading? And you can do that based on technical reasons. You can buy and sell based on fundamental. You can buy and sell based on flows, internet market flows, who's buying, who's selling, put call ratio, those kind of things. And you can buy and sell based on sentiment. So those are the 4 decisions you can use to, or pieces of information you can use to buy and sell. So that's the first skill, is buying and selling. The second skill you will need is risk management. You will need to be able to manage risk on your trades, on your portfolio, on each trade you do over time. And you have to, that's much more math-based. It's not complicated math. The math is pretty straightforward, but risk is really about a numbers game. And you need to have enough trades, about 100 trades done to understand what your baseline statistics are. And once you understand that, then you can start to use risk management based on how well you perform. So it would be kind of like, okay, you want to run a marathon, you run several marathons, and then you get an idea of your time. And then we know what your baseline speed is, miles per hour, kilometers per hour, and how we can improve that. Same with trading. We need to have a baseline of how you perform, and then we can decide how we really want to manage risk. In the beginning, just keep it simple. Risk less than 1% per trade. Keep it a fixed amount per trade. And that will keep you stable and in the game. That will minimize losses when you lose, and it will improve wins when you gain. It'll just stabilize your risk. So risk management is the second skill. The third skill is analytical skill. You have to be able to analyze your performance over time. As you make trades for the week, for the month, you have to be able to look back upon the data of your trades and use that to find out where your strengths and weaknesses are. Analytics is one of my skills where, not just for myself, but I can look at a trader's account performance statistics and find out where their strengths and weaknesses are just from the numbers. I can generally tell what time frames they're trading just from the numbers. I can generally tell whether they need to improve their accuracy, their plus R, adjust instruments, hold trades longer, adjust stop loss. I can generally spot all those patterns just from looking at their numbers. You can build those analytical skills too. And so you need analytical skills to be able to look at your data and find ways that you can improve, constantly focusing on how you can improve. Do that enough times and eventually you'll be profitable. And then the last string skill is mindset. We've talked about this. You need to be able to manage your emotions, manage your thoughts, execute your plan, and mentally execute what you need to. Trading is like a sport. It's a performance-based endeavor. If you don't perform mentally, you won't see consistency or profits in your trading. It's not a physical sport. We're not having to throw, an American football or kick a football or throw a baseball or shoot a basketball. We are mentally executing. Therefore, how we mentally execute and how our mind operates and how we manage our emotions matters. So those are the 4 skills you need to make money trading. If you're missing any one of those, you will struggle. So if you want to know how you can improve or reduce losses as a beginner, build all 4 of those skills. You do that, and eventually you'll just find yourself being profitable. Yeah, obviously you need a strategy, but you need all of those things combined. This is a great question. Okay. What is the one best instrument you can trade with or invest in? From my opinion, it's the one that's the most volatile. You don't make money if the market's not moving. You can with options, but we're not really going to dive too much really into options today. So options, you can make money with certain stocks and CFDs if there's a dividend, but not many have positive dividends these days. So if a stock or FX pair or whatever is not moving, if it's simply just kind of stuck in place, you're not going to make any money. So you need to be able to find something that moves. And that takes a skill to be able to read the charts, read the technical analysis, read the price action. When you do that and you use filters, stock scanners, all kinds of things that will help you find what's moving. What's moving creates the greatest profit potential. So the answer to that question is whatever is the most volatile and moving the most. Yeah. How to hedge the market and protect accounts. The retail way that most retail traders try and hedge is, let's say you're long the SPY which is the S&P 500 ETF. Most people will take a long and then they'll take a short. And while that's technically a true hedge, the problem is that you've complexified your trade. You've basically taken 2 trades at the same time. If you had a hard time managing one and timing one, well, then you've just doubled that by adding a second trade. If you have a long bias, but you think the market's going to sell off and you sell short while having a short and a long, well, then you need to be able to time that short. And then you also have to be able to time that in coordination with your long. So while that's technically a true market hedge, it's a really inefficient way to hedge. Most professional traders, the best way to hedge is to trade options, learn options. You learn options and it's allows you to actually hedge without owning the stock. And so I would like to say more about this, but this is how to create and trade your stock portfolio. So it kind of deviates a little bit, but I would suggest spending time learning options. We have a free video that's coming out in a couple weeks that is going to give a fantastic introduction to options. And if you want a free ebook, email me after and I'll send you a free ebook on how to understand options. But just real simply in explaining options and why it's the best way to hedge. Your question is how to hedge the market and protect accounts. So let's say I own the SPY. I'm long the SPY. Let's say I bought it at 394. So I own it right here. I'm long. So I bought it. And let's say the SPY starts to go down. When I'm trading the SPY, I am trading the ETF on the SPY. So it's the It's the most natural match for the S&P 500 in an ETF. And SPY is when people want to trade the S&P 500, this is what most retail traders trade. Professionals trade SPX, retail traders trade SPY. So when you are trading the SPY, you have shares in that ETF. Well, when you trade an option, kind of like a CFD, when you buy a CFD in a stock, you actually don't own the stock. CFD stands for contract for difference. It's really a contract you have to profit or lose based upon the movements of that stock price in the stock, but you don't actually own the shares. If I have Apple shares, I actually own a part of the shares. If I buy a CFD in Apple, I don't own Apple shares. An option is simply a contract that gives you the potential to buy or sell the shares in that stock without actually owning them. And the great thing about options is that you get leverage. For every single option contract you trade, it's equivalent to 100 shares of that stock. And so instead of being long and short Apple, let's put up Apple right here. Instead of being long and short Apple at the same time, which most brokers won't allow you to do, but let's say they did, you can be long Apple, but then you could also buy a option that will profit if the market goes down. And so you have an option which profits if the market goes down. And if the market goes up, you're profiting from the stock. That's a more natural way to hedge your position. So yeah, it's a really, really good question. It's an important question that I feel like most traders are not introduced to, and they need to be introduced to. Okay, Magama has a question here. So would you choose one or two volatile ones to trade continuously, or what number? No, so there are stocks that tend to be consistently volatile. Tesla is a great example of one of the most volatile stocks out there. It just moves a lot, partially because it has a lot of retail interest, probably because there's just a lot of activity in it. On an average day, Tesla's moving, its average 10-day volume is 34 million shares. Right now it's at 25. So not a gangster day, but it's a pretty strong day. And it just moves a lot. So let me pull up a 1 hour chart. These blue lines is the pre-market and aftermarket. The white lines is the open market. Tesla opened at 648. It's at 665. That's, what is that? $17 in 5 hours. Yesterday, it had a low of roughly 593 and at a high of 633. That's a $40 swing. It's a very volatile stock. So Tesla is, if you want something that's volatile, you'll get plenty of volatility in Tesla, at least for now. But I wouldn't necessarily fixate on Tesla. If you want volatility and you want to trade Tesla consistently, you feel like you want to learn about the company, by all means do it. I just heard a doo doo doo. I'm not sure what that was. That was interesting. Okay. I will just roll with that. So yeah, super important that, if you want to trade a volatile stock, Tesla is pretty volatile. QQQ, which is the ETF for the NASDAQ, tends to have more volatility than the SPYs. IWM, which is the ETF for the RUT, the Russell 2000, also tends to have some volatility. So in terms of most volatile stock, that's consistently volatile, I would choose Tesla. But my recommendation is more so to find a stock that has good movement for that day, positive news catalysts, volume is at or above the average 10-day volume. When you get that, that means there's a lot of institutional interest, a lot of eyes on that stock, and that creates an opportunity for that stock to really move on that day. So that would be my recommendation. It's a great question. Nagababan has a question. Is there any way to screen most volatile market in a time? Yeah. So if you want a free stock screener, I'm not sure about, I'll have to check with XTB, but TradingView does have a free scanner. I think they have some kind of basic filters in XStation 5. It's been a little bit since I used it, So definitely check with that first. TradingView does have one though. And so I have a fixed scanner that I'm looking for a stock at or above $3. I'm looking for it to gap 3% or more. I want the pre-market volume to be, this should be changed. It shouldn't be 250K. I generally want it to be more like 600,000 and above. And market cap, I'm not too concerned about, but between 2 million and 2 billion. And then I'm really looking at, hey, what's the percent change on the day? Oh, okay, well, this is at $4.85. It was up 9.78 in the gap in the pre-market. Volume is okay. It's not great, but it gained 18% on the day. So that helps me to filter. So you'd want to set up filters, basically looking for stocks that are above a certain price, gap up by a certain amount of price, have a certain amount of volume, 600,000 shares or above, and ideally moving 5-10% or more. If you set, a stock scanner for those filters, they'll generally tell you what are the strongest movers on the day. Yeah, it's a great question. Okay, Uchiyo Suji, can you provide some insight into existing market and forex triangular arbitrage opportunities? That's not really the focus of this webinar. This is more about stocks and how to create and trade a stock portfolio. That'd be a separate webinar, So yeah, I'm not really a forex arbitrage guy. It's just not my cup of tea. In forex, I tend to trade directionally, and if I'm not trading directionally, then I'm trading forex options. But arbitrage, I generally don't find that. I find that to be a very specialized field and very hard for a lot of people to do. I think it's better for traders to try and find methods that they could trade FX directionally. If you're going to trade FX, if you're going to trade stocks, which is the focus of this, that's a very different story. Okay, so that covers those questions. Let's move on to this one here. So I'm a complete beginner. With all the resources and content available online, it can be hard to sift through the junk versus the real advice. It's totally true. It's a very good experience. Just to put this in perspective, when I started trading 21 years ago, there were only 6 websites on the planet that covered forex trading. 6. Now there are millions. And so it's much harder to sift through what's solid and what's not. Where would you suggest I start, and what would be a realistic starting budget to invest? What are the best blogs and news articles to follow and get relevant updates on what's happening in the market? Okay, so there's 3 questions here. So as a beginner, how do you sift through the junk and the real advice? Look for somebody who's got ideally institutional market experience. That means that a minimum they were a broker above or traded for a prop firm, traded for a hedge fund, traded at a bank. Ideally, there's someone who has institutional experience. So that would be very important. You're going to want somebody who's going to have years and years of market experience. And you're going to want somebody especially that's traded through at least one full market cycle. That means a full bear market and a full bull market. And if they've traded through multiple bear market cycles, all the better. In trading, experience matters. There are a lot of traders who just started last year. They started right after the market bounced off the COVID lows. And they're of the idea that stocks only go up because that's all they've known. But that's not how markets work. There are bull market and bear market cycles, and you have to be able to trade both. If you can't, you're going to get killed. So it's important to be working with somebody who has experience through at least one market cycle, one full bull, one for bear market cycle. If they have multiple, even better, because now they've seen multiple bull and multiple bear markets. They have the experience and they understand how the market can change. There's a lot of YouTubers out there who are YouTubers, and they would often talk about, buy dividend stocks. And here we are, it's COVID, and they're like, buy more dividend stocks. Well, this is where experience matters. Experience, if you've been through a bear market, will tell you during bear markets and recessions, most stocks, companies cut their dividends to 0. A dividend is a cost. So to save costs, they cut dividends. And yet here's this YouTuber who was a former magician telling you, you should be buying dividends. Lo and behold, a month later, all those companies that they bought dividends cut their dividends. So now you no longer have that dividend income. And now you're stuck with the stock that is losing money and it has no dividend. Experience matters. And then what do you see? That same YouTuber a year later saying, yeah, there's a problem with dividends. Experience matters. Experience matters in trading. And so, it's very important that you find somebody that has experience. And another thing, the last two things that are most important is find somebody ideally that has a verified profitable track record. It should be verified. It should be profitable. It should be a live account. If they're not, put them towards the back of the list. And then the last thing is how they communicate. It doesn't matter how good they are as a trader. They may not be a good teacher as well. Being a good trader is one skill. Being a good teacher is another skill. Very few traders have both. And so, you need to find one who has both ideally. And when you hear them speak, they make sense to you. If they don't make sense to you, if you don't understand, it doesn't matter if they're making $100 million a year, you won't be able to learn from them. You have to find somebody you can learn from. So that's my general recommendation. What would be a realistic starting budget to invest? Depends on each individual. Ideally, this is cash you're investing that if you lose it, it's not a big deal. If you can start off on the low end, a few $1,000s, I think that's a good place to start off with. If you have less than that, you just have to be a little more patient, a little more precise. Take your time because you have less firepower to work with. So if you're under a couple $1,000s, then you just want to be a little bit more patient. Take your time. Yeah. What are the best blogs and news articles to follow to get relevant updates on what's happening in the market? I generally find that if you want a free news service, TradingView does have one. I'm not sure about XTB's news service. I think they do, but maybe Wally can chime in on that, or at least in the chat. But if X Station 5 has a good news feed, it's consistent, it's constantly updating, it's great. Also, you can get some news on TradingView free. Here's the stock Tesla. It will tell me all the news I have available on it. If I change this to Apple, then it will switch the news to what's important for Apple. So if you're looking for a free service, if X Station 5 has it, otherwise TradingView would be a good place. For paid services for stocks, Benzinga Pro is probably one of the best out there. Yeah. Okay. How do you see the future for gold? I think gold has a very interesting path ahead because it's kind of fallen out of interest with a good portion of today's generation of investors. Most of the millennial investors today are much more interested in, ESG type investments that are going to not just be profitable, but benefit the economy and the world. And I think that's a great thing to see. I've been trading for 21 years. Before this current generation, the majority of traders did not care what they were investing in as long as it made the money. Now they want both. They want to make money on a stock, and they also want that stock to have a positive impact on society. I think it's one of the best changes. I've been waiting for this change for years. I'm really glad this next generation of traders is doing that. And I hope it continues like that because when I started 21 years ago, Wall Street did not care about what they invested in. They can invest in the worst companies possible. As long as they made money, that's all they cared about. Now those values are slowly changing. And I think that's really positive. So with that being said, this next generation of traders tends to focus more on ESG investments, energy, sustainability, green tech kind of thing. And gold seems to have been kind of semi-replaced by Bitcoin. This current generation has much more connection to Bitcoin than they do gold. And so this new generation coming around seems to be interested in gold less than my generation or generations earlier. Also, you're starting to see that gold only has a limited amount of uses, whereas Bitcoin has potential to create multiple new markets and multiple downstream technologies and economies. And it seems like Bitcoin is becoming the new gold in the sense that it can not only be a potential store of value, but it also has broader application than gold. So there are still central banks buying gold. There are still countries buying gold. Russia, China, there are many countries that are still buying gold. So it may be supported in that way. But it seems like for our next generation, if you're really looking that far out, Bitcoin and crypto seem to have more of that potential than gold does. That's my opinion on that. Well, he's saying, yes, it's consistent. You receive notifications and important news from XTB. Okay, so you can get it from there as well. Okay, let's do a few more questions and we'll do some more open Q&A. Some said price action patterns are printed for trapping retail traders. Depends on how you define price action patterns. Candlestick patterns, I do not consider candlestick patterns to be the representative of price action, in as much as when I talk about price action, I am talking about the buying and selling orders in the market is what is the most proximate driver of price. So if there is, 100 million on the buy side and 10 million on the sell side, that is a huge imbalance between buyers and sellers, that's going to drive price. And it doesn't matter whether those flows are dominated by retail or dominated by institutionals. The largest flows tend to dominate price action and price's direction. And so with that being said, when I talk about price action, I'm talking about looking at the market, the charts, and understanding or getting an idea what is the dominant order flow in the market based upon these charts. Candlestick patterns are based, they were created over 200 years ago, totally different markets. Someone who said if you see XYZ formation in the candles, it generally means this. And statistically, most candlestick patterns fail. And they also leave you with a very limited ability to understand more of what's going on in the market, because all the patterns that you learn, they only teach you so much. I tend to focus more on structure and context versus candlestick patterns. So in terms of structure and patterns, I don't think those are being printed for retail traders because those represent the dominant flows in the market. The overall structure and context is only created by the dominant flows in the market, whether those are dealer flows or option flows or retail flows, it doesn't matter. The dominant flows in the market will be the most proximate driver of the price action you see in the charts. So I don't think those patterns are printed to trap retail traders. Most brokerages or dealers or institutions do not care about you. They are elephants. Retail traders are ants. If you're an elephant walking in the savannah, you don't move out of the way for ants. They got bigger fish to worry about. So I don't really buy into that. And I do trade patterns, but I would call them structures. I trade structures because those are collections of dominant order flow in the market. So yes, a very, very good question. Okay, which days of the week are best for trading US equities? Very good question. Mondays tend to be the slowest days. As a whole, Tuesday, Wednesday, Thursdays can be really good. Fridays can be good, depending upon if there's a lot of options expiring that Friday. Monthly options expire the third Friday of every month. Weekly options can generally expire Friday morning. So if you have a lot of option flows in the market on that Friday, that can create a lot of hedging and unwinding of positions. And if you think of what a dealer or a market maker is doing, they're not trading directional exposure. That's not their business. Their business is to make a market, and they're hedging constantly. And so, if they have a client who comes in and buys 1,000 calls options to be long in the market, well, then they're on the other side of that transaction. They're going to immediately start hedging that position. That means they're short 1,000 calls. They're going to have to buy futures to hedge that position. They'll have to go long futures to hedge that position. And so that can have there can be a lot of those rebalancing flows and hedging flows on Fridays, and that can create wild swings in the price action. But in terms of my own performance, we generally did best Tuesday, Wednesday, Thursdays. Mondays can be a little bit slow because the options that expire on Friday, now you kind of have a clean slate on Monday. So it can be a little slow for positions to build. And it's also the weekend, so people are kind of digesting things. So I trade all 5 days. I trade very little on Fridays, but I trade all 5 days. Tuesday through Thursday tend to be the busiest, but if you can, trade all 5. Yeah, that's a very good question. From your experience, would you suggest trading stocks is more profitable than FX? If yes, please for variety reasons. Yes, it's a very good question, and it's one of the most important questions I think that FX traders are experiencing right now. And so let me kind of provide some evidence on this. So let me pull up an FX pair. Let's take euro, US dollar. And I'm going to pull it up on the weekly time frame. And I'm going to add an indicator called the ATR indicator, stands for average true range. And what this is going to do is show me the average range of the euro dollar over a week in terms of pips. And so I'm going to take this indicator and let me adjust it. There it is. Okay. So since it's a weekly, let's set the period to 4 for an average of 4 weeks in a month. Then we'll go to EMA. Okay. All right. So right now, the euro US dollar is on an average week. It says 0.0134. If you map that up to the price on the euro US dollar, it's 134 pips per week. During COVID, that exploded to 460 pips per week. But within a matter of weeks, it contracted back down. So I want you to just remember this. Here's where the volatility is right now. And I'll put a horizontal line on this. Alt-H helps you put a horizontal line on TradingView charts. 134. I'm going to scroll back to when I started trading, which is right around here. And this 134 is the low end. If I put a line down the middle, you can see that the market was averaging 237 pips per week. That's 100 pips more. That's roughly what, 60% more, 70% more than it is right now. So FX volatility has contracted massively, and you can see these spikes since 2008 are getting lower and lower and lower. COVID was the first spike that actually really kicked off volatility. So FX volatility is definitely down. The average for a long time, up to the crisis in 08, was about 225 pips, over 100 pips more than it is now. The high end was 345, and the GFC, Great Financial Crisis, got up to 858 pips a week. But as we can see, volatility is continually trending down. Why is that? Well, central bank yields, interest rate yields, have gone mostly to zero across most currencies. If there's no yield differential between the euro and the dollar, or it's very minor, investors have less incentive to be long euro or long US dollar because they're not making yield every day. When I first started trading, the yield differential was like 2 to 3%, sometimes 4%. And if you were trading the Kiwi dollar or the Aussie dollar versus the US, it was 4.5%. If you're trading Kiwi dollar, at one point it was up to like 7.75%. That gives you a massive reason to be long the currency with the higher yield, because every single day you're collecting that yield. It's called a carry trade. Now that yields across most G10 countries have come to zero, volatility is collapsing. There's less reason to invest in currencies. And that's why you're seeing currency flows, movements, pip ranges contract. And again, you need volatility to make money because it offers stronger directional movement. Now, XTB is one of the best brokers out there in terms of diversity of FX pairs. I think they offer close to 100 FX pairs. It's quite a lot of pairs they offer, way more than the average broker. Okay, so let's think about this. They offer 100 pairs, but really you could probably trade. Spreads are going to be wide. Some are not going to be that liquid. So really you could be trading regularly, maybe 50. So your list is now really down to 50. But then again, an average FX pair, not moving that much. Maybe it moves 1, 2, 3% on a day. Okay. Well, if it's only moving a few percent per day, again, that's not a strong directional movement. Now let's go back to a stock like, let's just go to the North American stocks. What do you see here? 8.98%, 3%, 1.5%, 1.4%, 2.5%, 2.6, 2.19. You're seeing a lot of movement. 4%, 3.67%. Again, stocks are in 5%, 3%, 3%, 4%, 4.8%. There's more volatility, 5%, 6%. There's more volatility in stocks. So not only if there were only 50 stocks, if you were to compare them on an even basis, well, you're going to get more volatility out of stocks than you will FX. That means stronger directional movements. That means more opportunities to make money. But then on top of it, there are 30,000 US stocks. And as far as I remember, XTB has hundreds of them. So they have way more stocks available to trade. And the stocks that they have to trade are more volatile than FX pairs. So to answer your question, yes. Your question was, is suggest trading stocks isn't more profitable than Forex? I think, at least for now, the relative golden age of Forex is over for now. That doesn't mean it can't change if we start to see divergence in yields. We start to see the US dollar go on a rate hike, cycle. If we start to see other central banks do it, that could really wake up the FX market. And that would be great for it. And I would love that. But I'm telling you from a personal experience, I'm making way more money trading stocks than FX. And most of my students now are making way more money trading stocks than FX. And there's reasons for that. Again, there's more stocks and there's more volatility. So based on sheer number of instruments available and volatility alone, I believe that creates more opportunities to make money trading stocks than FX. Doesn't mean we shouldn't trade FX. It just means I think there's more opportunities. If yields change, FX could get really hot really fast. That's a very, very good question. Okay. We have a question from Magdamam. How do you see the US dollar? I think short term, if US yields can continue to rise and there is an expectation that the US is going to go into a rate increasing cycle, that's going to be bullish, short, maybe medium term for the US dollar. Medium and long term, I am bearish on the US dollar. So, I believe that is going to benefit crypto, particularly Bitcoin and Ethereum. Eventually, when the US dollar does start to weaken, I would like to trade it against high yield currencies. And then I would probably look to trade it against, pound and other strong currencies. But for right now, I suspect that you're going to see short-term potential strength in the US dollar. We have been seeing it, rise off the lows. So we'll do US dollar euro reversed. And you can see just from the weekly chart and the structure, what is this? Just from the lows here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay. So in the last 12 weeks, assuming this week closes bullish, dollar's been gaining against the euro 9 out of 12 weeks, 75% of the time. That's strong. That's strong. And if we look at, here's where it made a low, series of lows, broke through that. Now we're back above that. And it seems like it's treating this as support here and here to launch higher. Dollar's got some short-term bullishness to it. So short-term, I think we have to be attentive that there is some bullishness on deck. I think the longer we get out from that, the further we start to see weakness. So yeah. Rafi asks, hi, could you look at D1 on the last two candlesticks on gold? I never look at just two candles by themselves, but I'm going to assume you're looking at gold versus the US dollar. So we'll pick that out. I never look at the candlesticks. 2 days is not going to be more important than the overall context and structure. The most dominant order flow in the market rarely ever is only contained within 2 days. You have to look at the structure, and the structure is kind of clear. Let's pull out my trusty pen. I have this impulsive move here, but the selling has been pretty consistent inside what I'd call a counter trend corrective channel. So it's just oscillating between the highs and the lows of this channel. until we see price action kind of go sideways like this for a little bit, this downward channel is in control. And as long as that's in control, then you have to feel like, hey, until this structure stabilizes sideways or up, the bears are in control. It's a two-way market because that's why we're seeing swings up and down. But since it's slanting downward, bears have slightly more control than the bulls. If the bulls are in control, it would either move sideways or start to move slightly up. We're not seeing that. And so as long as this is still in play, bears are still slightly more in control than the bulls. Bulls keep buying dips. They're able to make a little bit of money, but if they hold on it for too long, they buy a dip, make a little money, buy a dip a little, make a little money. But if they hold on too long, they lose money. So the natural structure and price action here, to me, is much more communicative than just the last two candles. And short term, this is bearish until it can start to stabilize. So yeah. Okay, and then Magda's saying, thank you, and how can we become your student? We have a course called Trading Masterclass. I'll leave a link towards the end of that where you can join up, get access to my pre-market live stream. I share my live trades for about the first hour and a half of the market, weekly analysis, all kinds of stuff. So yeah, we'll share a link to that later. Okay, next question here. Do you have your own strategy? Yes, I have my own strategy. I have many strategies. It should be important to note that fixed, rule-based, quantitative, or data-driven strategies generally have a shelf life in the market. That means eventually they expire and no longer become valid. The average shelf life of a quantitative, data-driven strategy in the markets is anywhere from 6 to 18 months. And then they tend to no longer work. Certain elements of that strategy may continue to work, but all those rules tend to change. The reason being is because the market's evolving. Volatility is elastic. That means it can expand or contract. Price action can manifest in an infinite amount of formations. And so any data-driven quantitative strategy, there's no algorithm that can account, and there's no set of rules that can account for an infinite amount of variations of price action and an infinite amount of expressions of volatility, which is elastic. So it's important to understand that strategies come and go, but skills never die. Let's go back to the basketball analogy. Let's go back to a basketball analogy. So there are certain skills in basketball that are just as important today as they were 100 years ago. Dribbling, passing, footwork, positioning with defenses, angles. Those skills are just as important and relevant today as they were 100 years ago. The game's changed. Defenses have evolved. Tactics have evolved. So strategies have evolved, but those core skills are still just as important. Same in football. The ability to dribble, to pass, to trap the football, to angles, to understand defenses and offenses, to cut things, give and go, all these things, just as important today as it was 100 years ago. So strategies, particularly rule-based strategies that are like, hey, if X happens and Y happens and Z happens, you do this. Those eventually wear out and expire. And they become useless. Certain parts of them may be useful, but there's no way the whole formula and rules continue to persist the same over time. That's why we focus on skills, because skills never die, strategies come and go. So it's super, super important that you understand that. We have multiple strategies, but they're based upon skills. And as long as you have the skills in place, you can always adapt and build a new strategy for the new market. And then once the market changes, you build another strategy, or you just continue to adapt and build skills that allow you to adapt in real time. I think that's, if you really want to last long in the market, you focus on skills. You don't just like zero in on the strategy. So yeah, very good question. Can I trade cryptocurrency also? And which of them is more profitable, cryptocurrency or forex trading? I think crypto right now has more volatility. and there's, a lot more opportunities and there's a lot more institutional flows. Like new institutional flows are flowing more into crypto than they are into FX right now. So between the two, I would vote for crypto. How can one trade here without a loss? Impossible. There is no way to trade without a loss. Losing is part of the game. Just like if you play baseball, you're going to strike out, you're going to miss the ball, you're not going to hit it sometimes. Just like a basketball player is going to miss shots, just like a soccer player or a goalkeeper is going to allow goals in. Losing is a part of the game. When you understand that, losing becomes less of a problem, especially if you lose less when you lose and you win more when you win. On top of that, if you happen to win more frequently than you lose, you're mathematically making money. If you have those two in place, you win more when you win and you win more often, mathematically, you're going to make money. Your goal is not to avoid losses. Your goal is to minimize the losses, reduce risk when you do, manage the losses as quickly as you can. And the last important thing is to learn from them. If you lose money, but you learn from it so that maybe the next trade or 10 trades down the line or 50 trades down the line, you make a better decision, you execute better, you have a better process, better trade selection. Well, then that loss that you learn from eventually becomes a win and maybe leads to many wins down the line. So I always say in my mindset course, there are two outcomes to any trade. You either win or you learn. If you win, you should learn anyways from that. If you lose, you should still be learning from that. So your goal should be to win and learn or to lose and learn. But you should always be learning. Then losses aren't that big a deal. You cannot avoid losses. It's impossible. There is no perfect loss-free strategy. It doesn't exist. It's a pipe dream. It's a fantasy. It's a scam somebody's selling you. It does not exist. Okay. I am new to this. And most of the icons in the app, I can't understand their functions and when to use and how to use to do it. I'm assuming you're talking about the XStation app. So XTB, I think, has some really good tutorials on how to use their app. I'd recommend checking out their tutorials so that this webinar is not so much about how to use the app. It's more about how to create and trade stocks profitably and then open Q&A. Yeah. What can I do in order to be profitable? So I feel like we covered that. 4 skills. You need 4 skills to be profitable. Buying and selling decision, a reason for it. You have to have a method and an edge for making buying and selling decisions. You have to have risk management as a skill. You have to have analytics as a skill, the ability to analyze your data, find where your strengths and weaknesses are and where you can improve and how you can improve. And then you need to have the mindset and trading psychology in place. If you have those 4 skills in place and a strategy with an edge, you should be able to make money and do it consistently. Okay, we got a few more questions and then we can do open Q&A. How do you control emotions in trading, especially related to greed and revenge trading after a big loss? Very, very important question. Very, very important question. This is a great question. I'm running out of tea and juice. All right. So the first step in solving any problem, whether it's emotions or trading, whatever it is being aware that the problem exists. It seems like you have some awareness because you're saying, hey, how do I deal with emotions? How do I deal with this greed and revenge trading after a big loss? And so, how can I deal with this? So you have some awareness that you have a big loss, and then you tend to have this emotional roller coaster that kind of takes you off the reservation, so to say. It like kicks you off your horse and your ability to make good decisions. So you have to become aware that this is a problem. And the sooner you can become aware that it's happening, the faster you can deal with the consequences. Now you're saying a big loss, but if you have one of the 4 skills, risk management, you should never experience a big loss. There may be some extreme circumstances, crazy event happens, the market jumps, 500 pips or points or whatever past your stop. Okay, those are kind of once in a lifetime, once in a decade type things. But the bottom line is that other than that, if you're controlling risk, you should never really experience a big loss. You should be managing your position sizing so that if it hits your stop loss or even goes a little bit past, it's still only a small amount to your count. That's why we said in the beginning, 0.5%, less than 1%. So if it hits your stop loss, you never experience a big loss. So risk management will help to avoid those situations as much as possible. But let's say one of those situations does occur for whatever reason. You have a fat finger trade, you put in too big a position size. Okay. The most important thing to realize is that after big loss, you have to understand that most likely these negative emotions of greed or revenge trading are not really the most accurate ways to assess the market. You know, what is revenge trading? It's you being angry at taking a loss, making a bad decision, whatever. But it's some sort of process where you're kind of taking anger out in the market. So what's the common denominator? The problem is you. And so how do you deal with that? Well, you can use techniques to manage your emotions in real time. You know, breathing, there are various breathing practices, deep diaphragmatic breathing, nasal breathing, very, very important to help regulate the body, regulate the mind, slow the mind down so that you can kind of get more calm and focused. You're not so hot. You're not so like agitated. Take a moment to do, you know, a very simple, deep breathing practice, and that will tend to help slow down the experience. And the more you can slow it down and calm your nervous system and calm your mind, the easier it is to not revenge trade, to make a more, you know, relaxed, focused decision. You need to, if you're experiencing this heavy emotion, this hot emotion of anger or revenge, we need to regulate that emotion first before you make any trading decision. Your first thing is you need to become aware of it and then regulate it. And so we teach methods in our mindset course, but a simple practice of just deep nasal breathing, 4 seconds in, 4 seconds out. Just doing that for 30 seconds or a minute can tend to calm you down, kind of reset, get you back focused again on what you need to. So if you're experiencing heavy emotions, you need to become aware of it, then you need to regulate that. You're not going to, your goal isn't necessarily to control emotions, because emotions, there are negative and there are positive emotions too. You don't want to control your positive emotions. It's far better to be able to manage that emotional energy and ideally transform it into something positive. But that's much more, that's like deeper mindset trading. Yeah. What is your take on day trading? Day trading is totally fine. I definitely recommend it. In our 2020 performance video, we share our accuracy, profitable months, you know, all kinds of profit factor, you know, everything, profitable days per week, all that stuff. So what you see here is every single one of these dots, red dot represents a loss, green dot represents a win. You can see there's more green than red. So we won more than we lost. About 61.5% accurate last year. The x-axis is the trade duration. So how many days it was open. And where do you see the largest cluster? You know, somewhere between 0 and 5 days. So we're doing a lot of day trading and short-term trading. Last year, we opened our brokerage account in 2018, like April, mid-April. We did about 500 trades between April and the end of the year. This year, we're almost at 300 trades already. We've committed to being much more active trading-wise. And we're already at about 300 trades right now. So we'll definitely surpass last year. We should be well over 1,000 trades when the year is done. But you can see there's a lot of day trading going on. The advantages of day trading is that you have a very fast, active feedback loop. Every single trade, the result of that, the market's going to give you feedback on how you did, how did you execute, how did you manage risk, how did you manage your 4 skills. The more times you do that, the easier it is for your brain to kind of synthesize that data and start to pick out, okay, this is what I did right on my wins. This is what I did wrong on my losses. There's tends to be patterns behind that. And so this is a very active feedback loop. Day trading offers a very active feedback loop. Doesn't mean everybody should day trade. You need a certain brain and mindset in the sense of like, it's not an IQ thing. It's more of, you tend to need to be someone who can think fast, can make calculations pretty fast, can think quickly on your feet, analyze things real quick, and just make really quick decisions and go with it. You have to be able to take risks really quickly. If you're not that person, if like you're at the grocery store and it takes you like 5 minutes to decide which cereal you want and you're looking at all the options, you need time to deliberate, probably shouldn't do day trading. But if you're like in a busy intersection and you can be like, hey, I need to walk this way and this way and this way, and you just think quickly, you tend to, people like that with that kind of thinking and brain tend to do well with day trading. My recommendation is at least try it, experiment with it so you have the experience. And if after a couple hundred trades, you don't feel you resonate with it, you don't enjoy it, you don't have an edge, okay, move on, but at least you learn from it. If you find you do have an edge, you're close to break even or profitable, you also like the quickness of it, then I definitely recommend, exploring that further. But I recommend it. I love it. The feedback loop alone is very, very powerful. That means something. Yeah. Okay. Let's get to some of the questions here. We got a few more up there. Phil Moore, good to see you. If you're the Phil Moore that comes to my YouTube channel videos. What ETFs indices do you generally use to gauge stocks you trade? I generally look at 3. So technically 4. I guess you could say 5. So anytime I start my market analysis for the day, I'm looking at SPY to kind of see what's going on in the S&P 500. I'll look at Qs to see what's going on in tech. And then I usually look at Bitcoin, but if I want to see what else like is going in small caps, I'll look at that's the Russell 2000. So this is kind of the small caps. IWM is the ETF for that. That's the iShares Trust Russell 2000 ETF. So if I'm trading small caps, I want to be paying attention to the IWM. You always generally want to know what's going on in SPY and Qs anyways, because first off, there's a lot of Qs in SPY. SPY has, a big impact on the market. Tech, a lot of things are very tech heavy right now. There's a lot of stocks in the NASDAQ. A lot of the biggest, performers today are in Qs. So it helps to look at Qs and it helps to look at IWM. If you start, wanting to trade SPY more actively, then you can look at VIX and SPY simultaneously. And also kind of get an understanding of what's going on in the options market. But yeah, those are the 3 most important. Those are 3 that I would recommend to gauge what's going on in the stocks. So Arata, English brain. That's awesome. Can I trade CFD without using leverage? That might be a broker specific question, because the broker is really going to decide what leverage is being offered and what's not, and whether you can or cannot trade that without leverage. It's certainly possible, but I don't think it's common by any means. If not, what's the lowest ratio you'd recommend for beginners? The lower, the better. When I first started, FX was 100 to 1, but right now I'm trading 4 to 1 leverage, so the lower you can get that, the better. Simply because leverage is a tool. If used correctly, it can be helpful. If used incorrectly, it can be hurtful. So it's kind of like, if you don't know really how to understand leverage or how useful or powerful it can be as a tool, it's kind of like not understanding how leverage really works. It's kind of like giving a big hammer to like a newborn baby who has the strength to lift a hammer. They might be like, oh, great tool, but they might also put their hand down and hammer it and, hurt their hand. That's kind of what leverage is like. If you know how to use that tool, then you can use it to hammer in nails and build all kinds of structures and carpentry. It's a tool. If you understand really how to use it well, it's useful. If you don't fully understand it, it can be harmful. Yeah, very, very important question. Magdama, which platforms would you recommend for BDC and BDC options? I'm not sure which brokers offer BDC options. In terms of Bitcoin, XStation 5 is great. It's, they got a lot of crypto exposure, which I really like. Phil Moore saying, great, thanks. And yeah, it's the same person. Okay, cool. Good to see you, Phil. I've seen you many times in the YouTube channel, so it's good to see you again. And if you haven't already, hit that like button. We've rolled out an hour and 15 minutes now, so I appreciate it. I can probably do a few more questions, and then I got to wrap it up because I got a staff meeting in about 15 minutes. So I got an alert on cues. Very strong on the day. Very, very strong, which we kind of talked about with our members once we saw it shooting out the gate. Expect it to go higher. I'm trying to understand more on when to enter and exit the market. I have a set of price action skills I'd recommend. Let me point you to a video that is really good for that. So we have a really good video on impulsive and corrective price action, how to look at the price action in the charts and use that to see, when is the market strong, when is the market weak. Ironically, I'm using the XTB platform for this. So I'll put this in the chat right here. And for when to enter, exit markets, you're going to need good technical price action skills. Watch this video. This video gives you some really good skills on how to do that. Okay, so I put that in the chat there. Basically, where do I even start to learn? If you're going to trade forex, we have a free forex beginners course. You can find it on our YouTube channel. So Second Skies Trading. You just go to Second Skies Trading, and you can search for. We have a free forex beginners course. We also have a free stock trading course. So that's the best stock trading course for beginners. We just released that a month ago. It's already doing great. A lot of people are liking it. Really explains how to get involved in stocks, and we have a forex one as well. We got an options one coming out soon. But start there, build a foundation first. I want to learn how to trade properly, build those 4 skills. Again, buying and selling decisions, risk management, analytics, mindset. Build those 4 skills. I'm new to trading, but how can I learn? We just kind of answered that with the intro to forex or intro to stock trading course. That'd be a great way to do it. What can help beginners become successful? 4 skills, super important. Focus on those 4 skills. Like a football player will say, okay, I'm going to build my dribbling, my passing, my trapping, my shooting skills, angles. Focus on it with that same intensity. You build those 4 skills down, you'll be in very, very good shape to make money from the markets. Gutierrez 288, opinion on Palantir long term. Kind of skeptical on it. Their numbers really weren't that great. They're already back down to kind of where their IPO was. And they're losing money. They're losing money. They're really only making money because of the US government, and their work has been subpar. And this is all my opinion. But yeah, I'm not a fan of Palantir long term. I'm not really a fan of it. If they were doing something innovative, doing really good work, their algorithms were behind a lot of the facial recognition, which they've then taken off the market because it had racial bias and all kinds of stuff, problems with it. If they had a really good product, a unique product and innovative stuff, then I would say, okay, maybe, but they didn't go IPO until 10, 13 years after being in the market. It's way long to be going IPOing. Usually if a company goes IPO at that point, it's because they want a payday for their founders. If you have already established market dominance at that point, you should have been IPOing a long time ago, not year 13. So I feel like this is kind of a dud. So it's just not the kind of stock I want to invest in. Yeah, that's just my thoughts on it, my opinion. Okay. All right. Any last questions? We'll take about 4 more minutes worth of questions. And let me just make sure I check in with my team real quick. Okay. You ready? 9 minutes. Sasha. Set the Zoom meeting. Okay. Aranda, English brain. I love that. Do forex trading and gold trading use the same technical analysis techniques? Yes, yes. The price action techniques that I teach you, especially the ones that we talked about that I gave you links for, they work on any instrument, any time frame. It's because if you understand what they're about, again, as we said before, the most dominant order flow in the markets is the most proximate driver of price action. We are teaching you models and structures that help you to read those most dominant flows in the market. And so that means it's adaptable. It adapts with volatility. It adapts with, expanding, contracting volatility. It's more focused on understanding the order flows in the market. And when you do that, you can use on any instrument, any time frame. So yes, learn those skills on that for sure. Magdama, how do I feel about wheat stocks? Long-term, I'm bullish on them. Short-term, they're fine, kind of struggling a little bit. But Canna stocks, long-term, I'm bullish on them because especially as I suspect that legislation is going to come down the line in the U.S. to continue to decriminalize it. Maybe not legalize it, but decriminalize it. There's just so much tax revenue. It's hard not to think that they're going to, start opening up more and more states. Yeah, it's a great question. Okay, cool. Okay, any last questions before we wrap it up? Sal and Waleed wanted me to mention this. So this was a free open Q&A, and it really has the whole point behind this was we have created, myself in partnership with XTB, we have created a how to create and trade a stock portfolio for the year 2021 course for XTB members only. And maybe Wally can chime in on the chat to let me know, but I'm pretty sure it's for live account holders. I don't know if they have a certain size account or if it's VIP only, but we've created this course for those members. He's saying correct. Okay, great. So, is it VIP only or is it just live account holders? Just want to verify. Account holders. Okay, so it's live account holders. So if you were to, open up a live account, you don't have one right now and you open one up, then I think they're going to be publishing the course very soon in the next few days if it's not already. You'll get access to that course. So we'll take a lot of these things and we'll go much deeper on that. I'll teach you some strategies. I'll teach you how to filter stocks. I'll teach you some price action skills. There'll be a lot of information in that course, only for XTB live account holders. So if you don't have a live account now, you have a much greater impetus to do so. I recommend doing it. You'll get access to the course. Also, I think in the future, like somewhere a few weeks or a month on the line, we're going to be doing a webinar only for those live account holders who have taken the course. And we'll be going more in depth and people will be able to ask questions on those lessons that I taught in the course and the strategies and charts and everything. So if you don't have a live account, now is the time to do that. You'll get access to that course just by being a live account holder. And we'll get to a follow-up webinar that will not be published live or on YouTube or anything. It will be private account members only. So definitely go through that. It'll probably be sometime in a month. Uchi Suji's, I'm interested in acquiring Jamaican currency, US currency for Trinidad dollars. Can I do online or even via cryptocurrency? Yeah, that's more focused on like bank transfer and things like that. I would check out, like I know, I think xe.com, does something with that, but you have to look with that. It's not quite the focus, but it's something you have to look with, who does cash cryptocurrency transfer kind of stuff. Yeah. Yeah. Okay, great. So I'm going to wrap it up. It was great having you all here on a Wednesday morning, afternoon, evening, wherever you are in the world. I hope to see you all for the private XTB live account member webinar we'll be doing several weeks down the line on this course. And I hope you enjoy that and I hope it really advances your understanding of stock trading, because if you think about it, imagine if the currency market had 30,000 currency pairs, how many more trade opportunities would there be? And imagine if the currency market was more volatile. how many more trade opportunities would there be? That's the power of learning stocks and adding stocks, whether it's CFDs or the actual shares. XTB, I've been pushing them for 2 years now. Start offering shares, start offering actual shares. And they're moving in this direction. They have been moving in this direction. And I'm really glad they're making that adjustment. And so they just continue to expand their instrument base and asset class base, and it's awesome. And so, if you really learn how to master or at least be good at 2 asset classes, you're giving yourself more opportunities to make money and learn from. And that's really what the goal of this is about, is how to create and trade a stock portfolio and how to use these methods to start buying and selling stocks and trading them as part of your portfolio. So join the course on that, get the live account, join the course on that. Other than that, have a great day. If you want to learn more about us, check us out at secondskiesforex.com. You can check out our YouTube channel, Second Skies Trading. Tons of free videos and everything like that. So I wish you the best. I thank XTV for this. Great brokerage, great platform. Good luck trading, everybody. And I hope to see you on the private webinar in the future. Take care, everyone.